Hey guys, welcome back to another exclusive podcast from IronFX. At IronFX, we're dedicated to bringing you the absolute best trading education to help you take your trading to the next level. In today's podcast, we'll be talking about the different types of orders you can place in the markets and how and when rather you should use them. All right. So in trading, there are two main types of orders. Right. There is this thing which we call the market order. Right? The market order is when you enter, buy or sell trade at the current price of the market, meaning that when you click on buy or click on sell, you instantaneously enter the trade, right? And what the price in the market is showing you, right, is a price which you are entering the trade on. Okay, so that's what we call by market orders. The other one is what we call pending orders. Pending orders is when you forecast into the future where price might actually rise or fall to, and if it reaches that level, you either buy or sell. Okay, so pending orders, right, gets broken down further into like buy stop, sell stop, buy limit, sell limit. But at its very basic level, it is waiting for price to rise to a certain level before you decide to buy or sell. Okay, so this is so not only rise to a certain level but also drop to a certain level before you buy or sell. In this kind of situations, right, it is when you actually place this is usually when you have a certain strategy that requires a couple of trading conditions to be met. Okay, for example, let's just say, right, this is an example of having this thing called a sell limit, right? A sell limit basically is when price reach, a sell limit is usually placed above current price. So if the price of, for example, the price of Apple is $1 and you have a sell limit at $2, right? That means once the price of Apple reaches $2, that is when you would sell. You will sell Apple in the hopes of it dropping, right? So that's the meaning of a sell limit. Now, the sell limit is because you're ideally looking for prices to reverse, right? I mean, when you sell, you expect prices to drop. When you buy, you expect prices to rise. But why would you put a sell limit at a particular price in the future, right? One common example is if you notice, right, that in the past maybe 3 months, every time the price of Apple, for example, reaches $2, it tends to reverse off that level, right? It goes there, it reverses, it goes there, it reverses, it goes there, and it drops. So you in your mind you have established that it looks like the price of Apple is facing difficulties rising beyond $2, and more often than not, in the past three occurrences that it reaches there, it has reversed. So the fourth time it reaches there, that is where you put your pending order, saying that okay, once it reaches that level, I will sell, right? And price will only then be triggered. Your pending order, your pending sell limit in this case, will only be triggered once price reaches that $2. Okay. So one of the additional benefits of using a limit order, or rather a pending order, is that you don't need to be in front of the computer monitoring every single second before price reaches that level. Imagine if when you're asleep, right, and the price of Apple rises up to $2, reaches the level and it reverses, but you were asleep, so you didn't manage to take the trade, right? So that is that's one of the benefits of pending orders is that you can put it there. Why you're putting it there, right? You can take your mind off the trade. You put it there, go to sleep. Even if price reaches that level while you're sleeping, it will execute the order, right? So that's what a sell limit is. A buy limit is opposite. A buy limit is placed below price, right? So if the price of Apple is $1, let's just say the price of Apple maybe is like $10 now. Okay, you might have a buy limit at $9. So that means if price drops from $10 to $9, right, you would get into a buy trade, right? And ideally, play the bounce. You expect prices to go up. Okay, so those are two examples of buy limit and sell limit. And the other two types of pending orders which you can use is what we call a sell limit, no, a sell stop and a buy stop. Okay, a sell stop and a buy stop. A sell stop, right, is actually placed below price, right? It's at a level where you believe that all right, price is going to drop further. So in our example now, right, price of Apple is $10, right? You have sell stop placed at $9 because you figured that if it drops to $9, it's gonna drop even further to like 876, right? So it's more useful if you're playing a breakout strategy, right? Previously, when you talk about buy limit and sell limit, it's more similar to a reversal kind of strategy where price reaches a certain level and it reverse. So if your trading strategy focuses on reversals, that's where you use a buy stop and a sell, no, a buy limit and a sell limit. But if your trading strategy focuses on breakouts, right, that's where you use the buy stop and the sell stop. So the sell stop in this example, you put it below price. If $10 reaches $9, right? No, rather, price reaches $9, then you would sell, expecting it to drop further to 8,765. Basically, you're expecting prices to drop further. And for a buy stop example, right, you place it above price, right? So let's just say Apple is at $10. You can place your buy stop at $11, right? So if prices go up to $11, you buy in the hopes of it rising up to 12, 13, 14. Basically in the hopes of it rising further. Okay. Same benefits as what we mentioned previously. Main benefit of this is that you don't need to be monitoring your trade every single minute of the day as price approaches it. Right, you can take a mind of it, you set it in place, and you let it happen. Basically, right? So you notice that there are market orders where you get in and out of the market right away, right? That means instantaneous, almost instantaneous, right? Then you got the pending orders, right? Pending orders allows you to put it at a at a price in the future, okay? And even within pending orders, there is the reversal ones, which are the sell limit and buy limits, and then there are the ones that use of breakouts, sell stops and buy stops, okay? Now, I hope you found this session useful, right? Because that's it for me for today's podcast. Basically, covering the different kinds of like buy market orders and pending orders. There are other kinds, but these are really the other kinds where you combine, like buy buy stop limit, sell stop limit. There are different ways to combine it, but this forms the basis of it, right? So it's important for any trader to really understand how you can utilize this to fit it, for your trading strategy, because trading strategy most of the time it requires you to forecast into the future. If certain trading conditions are met, then you take the trade. All right, so it's an important skill set, I feel, right, to complement your trading strategy. All right, now do remember to subscribe to our podcast, as here at IronFX we are dedicated to bring you the very best trading education to take your trading to the next level. All right, until then, stay safe, trade safe, and peace out, guys.